Good afternoon, everyone, and welcome to Stock Market Today. Ali Quorum here, along with Ed Carson, where we will break down the action in the major indexes and take a look at a couple of stocks. And Ed, I guess today does settle it once and for all that stocks don't only go up after going up and up and up.
Yeah, after 11 straight days, I think on the NASDAQ, finally had a massive sell-off of that you can barely see on the chart. So it's sort of impressive. It was bound to happen at some point, and it happened even as Tesla had a pretty bad day, but got to put that in context of all the things that it's been doing. MP Materials is in a buy zone, and Dutch Bros, new IPO, that's technically in a buy zone as it heads into earnings tomorrow.
All right, well, let's analyze the major indexes. Here's the NASDAQ down about 0.6% today. So the hardest hit right behind it was the Russell 2000 down about 0.5%, the S&P 500 down 0.4%, and the Dow down about 0.3%. So it's pretty incredible the advance that the NASDAQ has seen. So finally a down day, but we are still well above the 10-day line and about 5.2% above the 50-day line. So still at elevated levels.
Yeah, and this was probably healthy. I mean, we were getting to the point where we were getting above 6% above the 50-day line on the NASDAQ, and especially the NASDAQ 100. So, I mean, the risks of a pullback were growing. Now, maybe this is all we'll have, and it could be that we go right back and become extended again, but you just have to watch out for it because, when you get up to 6% and especially 7%, then those risks rise, and the risks rise that you have a bigger pullback. And so you just have to be careful as, how much do you want to buy at these levels? It's one thing to be holding stocks if you bought it, on mid-October when we were going through the follow-through day. That's, today wasn't that big of a deal for, in most cases. But if you're buying right here, you could easily, if we do go through a pullback, that's just something to watch, that you could easily go under quite a bit.
Right. So not all too surprising for us as we've been tracking this, and we will continue to do just that. All right. Well, as you said, Ed, Tesla, one of the reasons behind the decline. So Tesla down about 12% today, some heavy volume behind the move. But what a strong advance this stock has seen, not only all year, but especially since the last earnings report, and Tesla perhaps moving a bit today on CEO Elon Musk, basically saying that he's planning on selling a chunk of his shares. So there's a lot of different ways to handle this stock if you're in it, especially if you bought it right. But one thing today, if you are following IB's canceling rules, is today was not a buying opportunity.
No, this was heavy volume sell-off from pretty getting to be pretty elevated levels, to be saying that. And this is not the kind of area where you'd want to be gotten at it, with the market being a little bit tricky. Some people are arguing there could be a buying opportunity. Look, will the stock rebound right away? It may be. And then people say, look, it was so smart of me to buy, or why didn't I buy it? Yeah, that'll happen, but that's just not in your favor. Look, if you bought it, if you weren't a recent buyer, like if you bought it even just a couple months ago, like at 785 or 730, and obviously if you were a long-term investor, this, you can do what you want. I mean, you've got plenty of cushion, but if you bought, say, on that breakout from 950, or, especially if you bought it more on that gap up and you're getting up to 950, getting up to 1,000, you're wiping out a big chunk of those gains. I mean, at that point, we talked about it. This ran up so much that we talk about the 8-week hold rule, but it depends on where you want to measure that. But it's still, you don't want to let all your gains go away at the very, nothing else. I mean, it's more of a guideline than a rule, but definitely have to watch out for that. And it's a question about where do you sell some. I mean, somebody you could have, I know that Justin Nielsen sold some late last week. He said, he had bought it a little earlier, just took some profits because it was getting extended from moving averages. It's breaking the 21-day line. Again, it doesn't mean you have to, it's not an all or nothing thing in this situation. Just to, continue on, I don't know, about on a weekly chart, this still is just another put into perspective. This has been up 11 straight weeks. So huge run. This is just taking out a little portion of that. Just a little portion of that. But it's also an example of why you should never, ever be buying these stocks extended. If you bought this near the highs, you're probably close to 20% down. And you just don't want to be in a stock that has been one of the biggest performers in the last couple of months and somehow be down 20% on it. And that's why, that goes not just for Tesla, but for any stock in this situation.
All right, well, moving on, let's take a look at MP Materials here. So up big for the week, about 16% so far. So tacking on another 2% today after a breakout of this cup in yesterday's session. So one mining stock that is in focus right now, Ed.
Yeah, and a lot of mining plays, a lot of steel plays, a lot of infrastructure related plays did well. This does rare earths, and it's in the U.S. Most rare earths are in China. It was interesting. This was our stock of the day today, and I didn't realize this, but Jed Graham was writing about it, and he mentioned that they mine it, but then they still do ship it to China for processing. But so it's not like China's out of this loop, but they will be doing more processing themselves. But this is a lucrative area. So many products rely on these materials that we don't have many, these raw minerals and raw materials. You can see the sales growth has been tremendous. It's profitable again. So, big moves there. It was a nice, almost a shakeout today. Pulled back below the buy point, but then came on strong. A lot of infrastructure plays had a bad day today. I mean, it wasn't, a lot of them came off, not terrible, but they came off. So this one did very well.
Mm-hmm. And last but not least, let's take a look at Dutch Brothers, BROS, a recent IPO reporting its earnings very soon here, Ed. And this is one example of the 8-week hold rule, not really what you want to do most likely in terms of buying an IPO. So taking a quick profit there when the stock was up about 30% from the buy point seemed like one good way to go about it.
Certainly taking some partial profits. And yeah, definitely a way to get at it. I mean, look, the 8-week hold rule coming up against earnings. And this is not just earnings, it's an earnings from an IPO. And it's not just earnings from an IPO, it's its first ever report. It could be tremendous. It might be tremendous. This is profitable. This is not development stage. It's going to have something resembling decent results. I mean, I don't know versus expectations, but it's not going to be, presumably it'll be showing growth and all that. But the stock has fallen back a lot, given up nearly all the gains from the breakout, and heading into earnings in that situation. You just don't want to give up all those gains and be in a situation where you want to do all that. I mean, maybe if you bought on that early entry, when it first, came down. Again, I missed it because it was before the follow through day, and I bemoaned that. And so that would be a little different. You could hold it there if you wanted to, but you've still given up a fair amount of the gains, even from that perspective. With the newer people should be, if you bought it at the actual breakout, that's pretty risky to be holding it and through all that downdraft and heading into earnings.
All right. Well, we'll have to see what the report looks like. And Ed, what if it does bounce off of this 21-day line and reacts positively to the results? Is that a chance to initiate a new buy or maybe add to your existing position?
You probably could if it bounced off that 21-day line, maybe broke. It's a pretty steep downtrend. So, I mean, I suppose you could be really aggressive because at least the earnings risk is off. You definitely would want to wait a little while into the session because I could imagine this going one way or the other and then doing something very different, just like a lot of earnings reports. So that's something to watch. And maybe you just wait for another base to form. There's nothing wrong with that.
Nothing wrong with that at all. All right, Ed, thank you so much. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details. We'll see you there and right back here after the close.